And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Hogue, hogue, hogue. Merry Christmas, everyone, and welcome to the market forecast. Whether you're on the naughty list or the nice list, the market doesn't care. It is the market forecast. My name is Santa Hogue. Thanks for trusting me with your time. Today is Thursday, December the 22nd, the last market forecast, the last broadcast of the year. Looking forward to an interesting and challenging trading day today and a very peaceful and blessed holiday season, Christmas, Hanukkah, whatever you celebrate, to all of you. As always, Santa is going to be focusing on trying to find accurate context, always thinking about risk management and remaining patient. This morning, the GDP and jobless claims numbers out. The GDP came out a little bit hot. They were looking for 2.9. That's what they said it was going to be. It came out 3.2%. Now, the perception, I think, is going to be that with the economy doing better than the Fed is expecting, we can expect higher rates for longer periods of time, and the markets are absorbing that information as we speak. A little less important to the markets this morning are the jobless claims that came out, both of them lower than expected. They were looking for initial jobless claims of 222,000, came out 216,000. Continuing jobless claims, they were looking for 1,683,000. It came out 1,672,000. So sitting down this morning after I fed the reindeer, which I have a little reindeer right here, markets were just a little bit lower. Stocks indices were just a little bit lower. You can see that they've now taken a steeper move to the downside. On the news, everybody's talking about this FTX thing. Some of the execs have started to flip on saying Sam bank run fraud. He's now been expedited to the U.S., so we'll see how that goes. Micron earnings disappointed yesterday afternoon. CarMax missed this morning as expectations as auto sales drop. Crude prices, unfortunately, are rising to early December levels after we had a deeper drop in crude stocks here in the U.S. yesterday. And as the Strategic Petroleum Reserve it gets to one of the lowest points it's been since about 1982, 1983. It's a good thing my sleigh runs on reindeer. The VIX this morning had a little pop, I guess, after the numbers came out. It was a little bit higher last I checked at 2028. Dollar index down slightly at 104.05, and the yield on the 10-year largely steady at 3.67%. As always, if you like what you see, and how can you not like Santa, make sure you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome here on the forecast. Make sure you subscribe to our YouTube channel so you can get notified when we go live. So again, it doesn't matter if you have been on the naughty list or the nice list. The markets don't know. It's up to us to find our opportunities, look for those asymmetric opportunities with small risk and bigger rewards, and work the probabilities, and that's what we're going to be trying to check out this morning. Good morning, everyone, to all my nice children out there. Scott Saw is the first one in the room. Scott, you saw, and you conquered. Caprice, Jimmy, third's not bad, right? Dimitar, ZK, Terry King, Shaw, Cunningham, Spencer. Can't miss the last forecast of the year. Glad that you're here. Jimmy Decker, GDP today. Yes, love that picture. Probably the thumbnail, right? Yeah, that's... they never took pictures of me on the trading floor when I was happy. Joel MB, ho, hog, hog. Bill Phillips, Haggle Matters, good morning, NASDAQ. Alex, Jason, Rusty Golfer, my spirit animal's with us. It's got to be warmer in Florida than it's going to be here for the next 3 or 4 days. We're going to be right around 0. Lots of snow. It's going to be a white Christmas. Santa's always happy about that, right? Ray, good morning. Yes, Santa is here. ZK, Anthony Bell, David, Haggle Matters, good morning. Santa Hogue. Jimmy, good. I'm glad you guys are enjoying this. I thought it would be kind of fun. I have the suit and it fits, so. Anissa, good morning, Great Dane. Yes. ZK, I think you should be on the nice list, right? Joel MB, what do you... Waiter, how do you like your steak, sir? Like winning an argument with my wife, waiter. Rare it is. I told my wife the joke that you told yesterday, and she got a little chuckle out of it. I'm going to make sure and tell her this one too, Joel MB. Thanks for putting those jokes in there. Vince, good morning, my man. JT, climbing down some chimneys. Yeah, that would be a stretch, wouldn't it? It's the magic that matters. Steve Cannon, Anthony Ball, yes, had a tight stop on and rode 24 handles. Nice job. Sarah Hall, good love and prayers to you as well. And I know, Sarah, you are top of the nice list. JD, they work for cookies, right? I know that the reindeer I have here works for treats, that's for sure. NASDAQ Dan Trader. Vince, Santa has delivered the best gift of all. I hope so. It's Santa's goal, Santa's wish is to get everybody closer to what we all want here, and that's your success. Yes. Got the white gloves, got the whole thing on. You'll have to guess if I'm wearing the Santa pants. Needed a new oven mitt, thanks. Yes, a new oven mitt. Yes. Manuel Caesar, good morning. Alejandro. Dijon, good morning. JT. Had a level of 39.19 for Globex and didn't set up. Well, we don't know what's going to set up for us today. Stay attentive. Keep looking. Glitter, good morning. Thank you very much, GR. Anthony Bell, Dr. VJ, Santa and all, yes. Yes, so this, again, is the last broadcast. We're not going to be doing the recap today, nor are we going to be doing the podcast. No forecast tomorrow. After today, I'm going to take a little bit of a break. Santa's got a lot to do over the next few days, so I'm sure that I will be visiting all of you. I've got a whole salmon stuffed in my suit already, but I am not yet drunk. Omid, good morning. Good to see everybody. Okay. So a lot of folks probably peeling off for the holidays already. We're probably going to start to see lower volume. It doesn't mean that the opportunities aren't going to be there. We've seen a pretty good downside opportunity in the S&Ps here, which when we get through the charts here, you'll see I was kind of expecting whether or not we had information or not. So Santa is going to go to the charts now, and we're going to start with the E-mini S&Ps, and we'll talk about what happened yesterday and why I was not all that impressed by that upside move. All right. If I could, I would come down and put a winning trade in everybody's stocking this morning. Well, we're going to trade today, and we'll be stopping by everybody's house over the weekend. All right. What happened yesterday? Well, we had a little bit of a pop. In the S&Ps, volume did not impress, nor did open interest. We've got an estimated loss of 8,300 in open interest. So with the loss of open interest and the low volume yesterday, it makes this little pop that we had yesterday feel a little bit hollow to me. It doesn't feel like there's anything real behind it. So, and today we know that we're pretty data dependent. So take a look at the 30-minute chart. All right, so we had a P-shaped profile, which indicates short covering. Well, short covering takes buying power away from the market. We had a breakout above a potential bear flag. Did it do what it should have? Did it bring volume? Did it bring open interest? No, it didn't. Now, there was a delta divergence yesterday in the S&Ps. By the end of the day, we had negative about 8,500 in delta, which would indicate longer time frame buyers in the marketplace. And that may be the case. This could be one of those situations where the shorter time frame traders that were holding shorts from yesterday are going to get paid. But it doesn't matter to the longer time frame traders that accumulated these longs in the S&Ps yesterday. Probably not. They were probably shorting outright stocks or something else. So these longer time frame traders are always hedging. They're always hedging their bets. This may have actually been what they were expecting today, because the losses they're accumulating in futures are being more than being taken care of by the other products that they're currently holding positions in. So if we did have shorts in short time frame from yesterday, they're currently getting paid. God bless. Wonderful. What the problem with this is it's happened outside regular trading hours. So now we're kind of stuck with, okay, what are we looking to do? Are we looking to buy weakness, or are we looking to sell rallies? We're still inside, basically, yesterday's range. We're below value. We've got overnight inventory to the short side. If we do get the opportunity down in this area to look for an execution, I'll be very interested in that. What about the point of control from yesterday? What about the gap that we didn't fill yesterday? If we're going to open between this point of control and this point of control, I think that there's a pretty good probability, of course, that there's always that probability when this happens, that we may fall into a day of repair. We may come down and check this point of control. That could put in a low for us. We could turn around and check back to the point of control just due to overnight inventory in the S&Ps. So I think that there's going to be good opportunity. I think that I'm going to try and be patient this morning and wait till we get some sort of daytime frame reference before I start getting into the market. I think that's probably Santa's best bet to manage risk in the S&Ps this morning. Take a look at the TPO chart. Now, this is regular trading hours session only. 2 P-shaped profiles in a row. The market was unable to reach this naked point of control, volume point of control, nor did it reach the TPO point of control that it really could have targeted yesterday. If these are shorts getting out, maybe some newer longs in longer time frame, we've taken a lot of buying power out of the marketplace. So the way this looks to me is, my hypothesis number one is we reach down to check either the TPO point of control and or the volume point of control from 2 days ago. We reach back up, or we go up here first, check these points of control, and then look down to try and check these points of control. So that tells me, even though we're kind of out of balance in the daytime frame, that I still want to try and stay patient. Take a look at crude oil now. Yesterday's pop above weekly kickoff high and above this trend line is a possible market state changer. Did it do a good job? Volume was pretty good. Absolutely, Haggle matters. Sometimes markets have to rally to break or break to rally. 100%. So we had a increase in open interest of about 5,600. That's real information there because we're no longer in rollover. So volume was pretty good. Open interest increased in an up move above important inflection levels. I'm looking for this market to show me that it is still in the mood to continue higher. Unfortunately, I think that that's the case. If we are going to look higher, the next visual target is all the way up at 8280. There is a naked point of control all the way up there that could be targeted by traders. If traders are looking at that level, they'll have a tendency to push price to that level. Unfortunately, right? So overnight inventory is long. Here's the 30-minute chart. We also had a degree of a delta divergence yesterday. By the end of the session yesterday, we had accumulated approximately about 1,500 in negative delta. Well, price went higher. When we know delta, we know that delta is the number of contracts that are traded on the offer versus on the bid. It's market orders that were sellers yesterday, which would make them more aggressive, but price moved higher. With an increase in open interest, that would indicate the potential of longer time frame traders in the market yesterday. All right, so now we've opened. Are we open yet? Yes, we've opened with a gap. It looks like the opening range is the low of the session. If we can't close the gap, look at yesterday. We opened, we couldn't close the gap, we pushed higher. We opened, we left the opening range at the low of the session today, and we can't fill the gap. I'm looking for opportunities to continue to buy this market. By the things I'm seeing, its attempted direction is doing well. It's a healthy upside move. Now, of course, anything can happen. So I'm looking at buy weakness. Here's the TPO chart. Very balanced day yesterday, but overall the effort was to the upside with negative delta, possible longer-term buyers here. We've left the opening range at the low here. We've been unable to make any effort to close the gap or any overnight inventory. The market is still continuing to the upside. What did I miss this morning? The opening range, 87. So that's a pretty big opening range. 40, 50 ticks. Well, if that's the case, we're gonna have to make this move to the upside to make the opening range worth it. I probably wouldn't have taken it anyway, so I don't really feel like I've missed anything. But this market could continue, like I said, to a pretty substantial upside move today. But again, anything can and will happen. Here's the NASDAQ. So the NASDAQ is a little bit different than yesterday, although I don't think it really matters now. We added 1,800 in open interest on a little bit higher volume. The performance yesterday in the NASDAQ was a little bit better, but it looks more like this is developing balance than becoming directional. Now it looks like we're headed towards the low end of that balance, which would make the weekly kickoff low an interesting level for an execution, 11,110. This is 11,100. I've got it in the wrong. That's 110-ish. There we go. Okay. So, balance forming, really kind of creeping down towards the low end of that balance. Overnight inventory is short. Even shorter now. Still inside yesterday's range. Got a naked point of control with right here with which to reach down to and check. So if we're going to open between those two, checking down to this point of control, checking back to this point of control on an inventory adjustment could be what's in play here. we've got this trend line, which basically is right at that point of control. I mean, this is a visual target. Now, if we can't hold their weekly kickoff low is the next step to look for opportunity. Gold. Weekly kickoff high, still resistant. How does resistance work? When we come to a level that the market can't go any further, there's two things that happen. The market's gotten too long for buyers to continue to buy it. They're already long. It's an overbought situation. The other thing about resistance is sometimes you'll get to a level where there is a large number of contracts for sale in that zone, in that area, and I think that's what we've got here in the S&Ps. We've been unable to accept above it. There's sellers up here that have not yet been satisfied. There's a pile of sell orders, but every time we get up there, we kind of pick off some of those orders, and in the case where we get a breakout, those shorts that have been selling up there are going to start to rethink their position pretty quickly. So right now, we've got resistance up there. We added 5,700 in open interest yesterday. That's pretty big number for the range that we had. We are hanging in the upper extreme, possibly exhausting some of the sell orders up there, but they are without a doubt still there, and we have to use this level for execution to limit risk. Volume was very low yesterday, even with that increase in open interest. Here's the 30-minute chart. 2 days of balance, we have fallen out. The numbers this morning, we've got a whole lot of space down below where we can pull all the way back to this point of control. We've got a gap to fill. When we talk about market structure, we're talking about holes, things that don't fit. An organized market doesn't leave gaps. It doesn't leave points of control. It may leave some, but we've got a gap here. We've got a naked point of control here. I'm going to extend that right now and take care of a little housework here. Visual target. Now, if we put in a low here and with some structure in the day time frame, I don't object to looking for a long. But again, I don't want to fight a market that's directional to the downside. So we're going to be patient. We're going to look for an opportunity if the market does create some sort of structure near the low to look for a move back towards settlement. Perhaps we've gotten a little bit too short here early in the session. But we've also got, naked point of control from yesterday, naked point of control from 3 days ago. These are going to be our visual targets. Into the euro. Still range bound, still short time frame controlled. We lost 134,000 contracts yesterday. Well, that was expiration. The March contract lost only 400, so lower volume, inert open interest. This market is really range bound and waiting for new information. We're saying watch the dollar, but the dollar is just kind of died there right where it is too. Here's the 30-minute chart. Look at this. 1, 2, 3, 4, 5 days, 6. Inside value. Very little. Big opportunity. Opportunity nonetheless. We're looking to fade extremes until proven wrong. Our overnight high is the upper extreme of the current area of balance. Just below here is the other extreme. I'm not even thinking about doing anything in the middle here. If I get an opportunity at the upper or the lower extreme of balance, then I'd be interested because that allows me, again, to limit risk. And that's the goal. Context, risk management, and patience to find the opportunities. We can go looking for trades all day long, and we're going to find them. They may not be the ones we really want. Here's the 10-year. Volume died yesterday. We added 8,500 in open interest, which in the 10-year is somewhat inert. I didn't hit the TPOs for the last couple of products, but that's all right. 30. Low extreme, upper extreme. Weak low yesterday. Here's that weak low on the TPO chart. Weak low, excess, lower highs, lower lows. Rates probably going to be going higher. Here we sit, right in a range and value from yesterday. Quick look at the natural gas. It's rollover. Tomorrow, you'll be trading the February contract. If you're going to be trading it, hopefully you'll remember to make that roll. So breaking out below weekly kickoff low, has the performance been that good? Well, not really. The January contract lost 7,100 contracts yesterday, but overall, we lost zero. There was zero change in open interest yesterday. So we're still trying to kind of push below this swing low here. Largely, we've been in digestion. We've just recently had this push to the downside. Here's a look at the 30. So testing below you the last couple of days' lows, which are relatively weak. We did have a late spike. Take a look at the 30-minute, at the TPO chart here. So our late spike, the base of it is right up around 540. Let's say, okay. So we've opened below below the late spike. That's the highest probability of acceptance of lower pricing. We can come all the way back up to the base of the late spike, 540, and still look to that as resistance. If we start to accept inside value from yesterday, the late spike is off. Okay, so opening below this late spike is the highest probability of acceptance of lower pricing. Doesn't mean it has to happen. Doesn't mean it has to happen. All right. So, I am going to miss you guys. I am going to miss this, and I'm going to be looking forward to getting a good rest and to starting next year strong. Get some ideas for us for next year to improve everything we're doing here. All I can say is be grateful, be humble, and be creative in your trades today. Stay centered. If you find yourself off center, you're putting yourself at greater risk. Step away. Let go of the venom. Anything that is venom in your veins is anger, jealousy, greed, fear, and it doesn't help anything. It doesn't hurt to be mad. It doesn't help to be mad. Doesn't help to be mad at yourself. Doesn't help to be mad at anybody else. A wise dad of mine once said, it doesn't help to be angry. It doesn't do you any good. Half the people you're mad at don't know you're mad at them. The other half don't care. The only person it affects is you. So when it comes to forgiveness, forgiveness is for you. I hope everybody has a blessed, peaceful, happy, safe, and fed Christmas. Say a prayer for everybody who doesn't. Say a prayer for world peace. God knows we need it. And be good to yourselves. We work hard at this. Santa's going to be good to you. Be good to yourself. Be good to your loved ones. I don't know what else to say except hogue, hogue, hogue. It's Christmas. Everybody enjoy. Looking forward to seeing you back here on, January the 3rd. And getting back into the rhythm of things. So, God bless you. God bless us, everyone, to quote Charles Dickens. And blessings to you all. I know I'll miss you. Don't miss me. And, hey, Lace. We got her this ball yesterday. My son did, and it's squeaky, so I took it away for the forecast. But now here she is. You see you? Go ahead. Very gentle. Good reindeer. Good reindeer. All right, everybody. Love you. Santa loves you. We are going to see tremendous success next year. It's my hope for all of you. I'm going to put that in your stockings. Christmas. Again, if you celebrate Hanukkah, whatever you celebrate, God bless you. Best to you. Best to your families and friends. We'll see you next year.